Hey everybody, good to be back here with you to finish off the week, and Happy New Year to all of you. Hope you had a fantastic celebration. Wishing you the best in 2026. Today we're going to take a look at the markets. There's been some changes actually to start the new year. Also want to take a look at an example strategy referred to as the dogs of the Dow, show you how that performed and show you how traders are entering that example strategy today. So looking forward to diving into that with you. Welcome to you, Jay Rich, as well as Riceberg, Chris. We've got Rojo, Will, and others on board here. Welcome to all of you folks. Any questions or comments you have, throw those in the chat so we can address those today. Looking forward to seeing those and seeing who's on board. And folks, joining the chat also by Cameron May, good coach, friend, colleague of mine. And folks, you can follow us both on X. He has listed our X handles there, Mike Fairboard CS and Cameron May CS. Okay, well, let's do this. We got to dive on into it. I got plenty to discuss today. So let's get rolling here with some disclosures. So information here is for general information purposes only. Paper Money software application is provided for educational purposes only as well. Now, investing does involve risk, including for some products more than your initial investment. A look at our futures disclosures and futures and futures options contracts that we will, futures and futures options trading involves substantial risk, not suitable for all investors, but we will reference those charts from time to time. Finally, past performance is no guarantee of future results. Okay, let's dive on in and just take a quick peek at the markets and see where we're at right now. You can see up top here, the markets been going a little bit sideways here. It's very, very interesting this time of year, folks, and oftentimes you just don't get the kind of volume that you normally would get. Taking a look at the ES over here, ES, it has been picking up a little bit, but this is our volume gauge on the market. But just remember, there are a lot of financial institutions that are not open, right? And a lot of the normal players aren't out there. And so basically what will happen is you do tend to get a lot of lighter, it's oftentimes the lightest volume of the year. So we kind of have to wait to see what happens next week when maybe some of the normal players are back, and we'll see, what volumes do and what direction prices will take. I will say this right now, the ES recently did make a new high, and same with the S&P, and it's coming back and kind of resting right towards a prior high range. Folks, in the minds of many traders, this is a very good setup on any kind of a stock as well. I mean, just technically speaking, we have the trend in our favor. We just made a new high, and we may in fact be resting upon the prior high, which, as many of you guys have known and have seen, that is where a lot of support can come in as stocks, in this case, a big group of stocks like the S&P 500, it can kind of staircase higher, which you'll see resting on prior highs. And so we're kind of, although the volumes have been weak and we've dipped down a little bit, we'll see if, we do staircase higher and move up. We're getting some signs right now. And by the way, we still have an hour left in the day, but this kind of represents that doji right now, a little bit of a tug of war between the bulls and the bears. Upside, we saw the bulls early on making some gains. They lost it, the bears to the downside, but it kind of represents indecision. And it oftentimes, that doji, that candlestick doji, particularly when it's happening at we just mentioned it, a support range. I know it's the S&P, but still just a larger group of companies that could be finding support there. That's also been known as a reversal type candle. So we'll see if, reversal can mean a couple of things. It can actually reverse to a sideways range, and you can see more of that, or we could actually see it extend up a little bit higher as well going forward. So interesting to see, big picture there. I want to do a brief overview too. We looked at the NDX or the SPX. Here's the NDX, the NASDAQ 100. You'll see it's a little bit different here. We didn't break into new highs. We had a higher run. It was a bigger percentage gain over here on the NDX to finish off the year, right over here. But we've got what I would refer to as more of a similar pattern in terms of lower highs and higher lows. Do you guys recognize that pattern at all? Some of you would say it's like a pennant, and sometimes you get a pennant after a bull flag, and you kind of get this little waviness off to the side. But within that pendant, oftentimes what you're going to find is a triangle pattern. And within that triangle, what we're looking for now, and so just be thinking, year ahead, what might we see are signs of a potential break higher here? Well, we're going to draw off this triangle pattern right here, off of the similar highs and the similar lows, right? Well, I should say, excuse me, lower highs and higher lows. We should see a move, according to the way technicians will look at a triangle, ahead of the apex of the triangle here. Now, what generally traders are looking for is the trend. It can either move up or move down, but oftentimes it will go in the direction of the underlying trend. And we're seeing that right there, very, very close to those levels, right? And by the way, it's going to be, I was going to say it this way, it's going to be incredibly difficult for us to keep getting tighter and tighter and tighter before we break out here. It's just basically the apex. You're going to get a breakout ahead of the apex because, yeah, that would be crazy if we just got tighter and finally we broke out when we hit the middle. It does happen on stocks a lot more frequently, but when you're dealing with 100 stocks in the NASDAQ, yeah, that's going to be tough to do. But one of the key things that traders will look for, folks, and it just stands to reason here. Do we break above the upper channel and, I'm going to say and, take out the prior high? You don't have to go much further once breaking above this upper channel to take out this high. But that is really the first indication of the possible move to the upside, again, in the direction of the trend. Doesn't have to go that way, but oftentimes traders will look for those prices to move in the direction of the trend, okay, as opposed to breaking lower here and dropping. But the nice thing is you've got some lines in there, a couple of trend lines, descending down from the top, descending from the bottom, to give us a sense of, okay, are we going to break out or break down, with more indications of that? Nothing's 100% in the market, but this is kind of a price pattern. And this is quite interesting to kind of see right now. But that's how, oftentimes traders will look at this. Now, here is the Dow Jones, and you can see the Dow Jones has really been holding flat and actually doing quite well after forming some higher highs, back in the November timeframe. You can see a high over here. It was high at the time. Let's see. If I go down here and just kind of highlight some of those prior highs there, and there, maybe some interesting support around that 48,000 level right there. Okay. And the Dow actually did okay as well last year. It was up. Well, let's see. The Dow, if we actually step back and look at some of these right now and see the performances on here, I've got the indices set up, you guys, and this is just a great way to kind of take a look, just using Market Watch tab to review 2025 performance. Now, one quick note on this, because I'm doing it live here in our demo account, is that we do have to account for today's change. And so these numbers have adjusted a little bit based on the year, but I went back 252 days, market days in the year, just to kind of show you what the performers were. You can see the best performers. In fact, if we're just looking at, I'll move this all the way over here to the right, put a little separation in between the two. There we go. So this is like the 1 year, and the NASDAQ top performer, you got the S&P right at 16%. The Dow, it was right around 13. It's up a little bit today. So it was like real close to 13. And there is the Russell. Okay. That's been the performance on the year, folks. I have to say this. We've seen this now 3 years. Yeah, 23, 4, and 5. 3 years. It's really been kind of a tech move that's really been outperforming the market. And that could be an example strategy as well. We could talk about that here in just a bit, because I do want to dive in to tech and show you what some of those areas within tech might be better positioned perhaps for a move in 2026. But as we get into this, each and every year, this time of the year, first day of the year, positions are being put on for one example strategy out there as well, another one that could be used. This is one that goes from year to year, and it does involve the Dow Jones Industrial Average, which did outperform. It's referred to as the dogs of the Dow. Dogs for short. It's funny, dogs of the Dow. It's referred to the dogs of the Dow. That's the performance kind of the prior year. How is it going to perform into the next year? So dogs of the Dow 2025. Okay, it performed approximately at 17.8%. Now we're talking about the Dow here, and the Dow is really made up of, you know, household names, a lot of blue chip companies, very large companies you'll be very familiar with. In fact, I'll just pull it up right now and highlight it here for you. I'll explain the strategy, how traders will use it. Again, this is just an example, but I wanted to bring it up because it did outperform, and it has had a tendency over periods of time, not every year, but to outperform the Dow. I'll explain it. I'll show it to you right now too as we pull this up, because this is a great area to look at how some of these strategies work. In fact, what you want to do is stay in market watch tab, but just go under indices now, scoot on down into public folders, and then we'll find it right there. Dow Jones Industrial Average. Okay. The 30 Dow stocks, right? Very, very large cap companies. That's your 1 year percent. Here's your change, etc. I'm going to highlight one area on this in just a moment, but before I do so, I wanted to just do this real quick. So I've got here, let me see, pull this guy up. There we go. So this is just on my X handle right now. This is the Dogs of the Dow list for 2026. So I just kind of want to show this to you while we are explaining how it works a little bit. I think many of you do already know how it does work. But as you look at this company, these groups of companies here, you'll see that, first of all, these are prices as of, I had to do it as of the last day of the year, trading day of the year. Okay. So December 31st. And what it does is it takes a look at the top 10 stocks in the Dow based upon the yield. So what the yield has been is it's based upon the highest yield. Okay. And basically what you do is if you had a portfolio, as an example, we have a portfolio, we'll just say it is, okay, we'll just say $10,000. It's 10K. What is done if you're following the Dogs of the Dow is you take the top 10 performers, I should say the top 10 highest yielders on the last day of the year, and you invest that portfolio, which we have is fictitiously $10,000, and we invest 10% in each one of these companies. Okay. And that you hold that all the way to, well, 12/31, the last trading day of the year. Okay, for example, is what you would do. You'd hold it the last trading day of the year, whatever that day might be. But you can take a look. I mean, these are those blue chip companies. These are these household names. And why it does perform is, in many cases, the yield of these companies might be higher than they normally are. I mean, here's Verizon. Let's just take a quick look at Verizon as an example. Show it to you. Here is VZ. Verizon, yeah, it's been down a little bit. And over this time frame, if we look at Verizon, they have been doing what? Well, there's a little bit of a dividend raise right there. A lot of times these Dow companies will raise the dividend. You got a couple of things that might be influencing that yield. Prices coming down, and on top of that, yields going higher. Now, keep in mind, the dividends can be cut at any time. Just as a side note, with any stock, even if they've got a long history of raising them, they can still be cut. Just a side note there. But a lot of time traders will look at more established companies, those household names that might have a lot of different revenue sources and have been able to sustain that dividend for a while. So what they might do is they might pick it up at lower prices. Remember, the higher yield can be a sign of a lower price, but you're getting the yield as well. But that's what we're looking at in terms of a potential performer to the upside. Okay. Now, there is one additional strategy that can really, it can do better at different times when we're looking at the Dow. I'm just going to pull this back up again. But what you do is of the Dow, it's referred to as the small dogs of the Dow. Thought I'd throw this in because the same time frames apply and also the same percentages, except you're looking at 20% in each one of your total portfolio of, let's say, 10K, because you're only dealing with 5 companies. Okay. Now, somebody could use 10 if they wanted to use half of a portfolio. I'm just giving you an idea. But what they'll do is they just take the lowest price stocks, the smallest. That's where the small dogs of the Dow comes from, of the top 10 dogs of the Dow list. And that's what they invest in. But it's only the 5 smallest or I'll put smallest, but it's actually lowest priced, right? Smallest based on price. And so what would those be right now? Well, we could say right there that Verizon would be the number one for dogs of the Dow. It's at the top of the list for yield. But you have to go down a little ways to actually see Coca-Cola down there. Okay. And if we keep going, you got Nike. These are all pretty well established, pretty well known names, household names. And if I hit this one here, 105, and I think the next one is going to be 143. So you got Merck and you've got Procter and Gamble. If you take a look at those, for example, what might you see on Merck, MRK? Well, Merck has, it is a lower price. And how did it get to be a lower price? Well, it had been down for a while. I guess the expectation on this small dogs of the Dow is how this strategy would work is maybe there could be somewhat of a cup and handle in here. Whatever the case might be, you broke above 100. Maybe there's an extension. I'm just using this as an example. But generally speaking, folks, it is just down in price. But still, it's in the top 10 yielders of the dogs of the Dow right there at 3.32. In fact, it's just the third off the top, for example, using Merck. Okay? So I wanted to highlight that because that is a strategy that is used like literally starting today is how some traders will do it. So that's it. Dogs of the Dow, small dogs of the Dow. And wanted to show you that because we only get one day of the year to show you when it does start. But that is the list right there. And again, those prices as are of this date here. It's probably going to be very similar to what you're seeing here. There could be a slight variation in one day, but I doubt it. All right. Great. All right, let's do it. And let's go ahead and just show you how you can find the performance of these two live if you were looking at it throughout the year. First of all, what you would do is you would take those names, each of those names there. You can use that. Here, I'll just do this real quick so you guys have it. And I'll just post it in here. You can go to just the X channel. And if you want, you can copy them. Folks, go in here and simply just go into a watch list. You can create a watch list yourself over here. Left-hand sidebar, a good way to do it. And bottom left-hand corner, watch list. You guys are very familiar with this, but just in case, right-click, or I'm sorry, left-click, create watch list, and then just something like dogs of the Dow 2026. Put each of those in here and just kind of go from there is what you could do, right? And I'll do that so we can actually maybe just keep an eye on it. Again, just an example strategy, but I wanted to make sure you knew about it. Yeah, there we go. So that's that. We'll just start off with the one we had, and I'll put those other ones in later. So, by the way, so you could have that up right now, and then you go into your Market Watch tab. I'll go full screen again over here. Go to the watch list, and now that we added it, I can go into my personal folders here and just find it. It'd be right up here. One more down. There we go. Dogs of the Dow. There's one 2024. And you would have it in here. By the way, once you have it in place, you can start also adding the other ones in as well. Just putting those in there. And then what you can do is track them and their performance, 1 month, etc., 1 year on down the line. Still taking a little bit of time to load. That's interesting. It's only one in here, but you guys get the idea how that would work. There we go. There's our 1 year performance. We don't necessarily need that. We're just looking at performances going forward on that time frame. But now you can track it. Another quick way, if you just wanted to track the Dow Jones, obviously this is very, very quick. Just jump over here, go into the public folder. If you want to track everything in the Dow Jones Industrial Average, we can easily go over here and customize this with a yield column right there. And I'm going to click it again. There we go. Put it up top. Now you can see those yields. If I sort them by yield, there you go. There's your Verizon. It's going to look very familiar, very similar to what it was on the last day of 2025, just a couple days ago, right? Okay, but now you can track these as well, and then you got their performances here. Be sure and set something like this up. If you were going to do this for the dogs, the Dow I just showed, make sure you had the yield column in there as well. Okay, well, that is that. Just wanted to highlight it just to make sure you guys aren't missing that. If you've heard about it, you know the details of how it's set up, and now you know a way on how to use it within the Thinkorswim platform. All right. Well, let's get into our regular market information, markets and sectors here. Did want to start off with market posture to begin the year before we dive into some interesting stock developments on the year. And if you come in over here, and here is the S&P 500, a key note that we look at on the daily chart here. We are looking at just a general market posture, and that is, are we bullish? Are we neutral? Are we bearish? We do use the 50-period moving average, the 100, and the 200. You can see that we're bullish on all, so we're actually bullish across the board, right? Where prices are above these levels right now. And so basically what we're looking at, we've got a longer-term trend, quite long, 200, really a common one that traders, investors will use. The 100 is known more as maybe an intermediate term trend, just abbreviating these for now. And this might be shorter term, actually I would say even to intermediate term, short to intermediate. There are shorter term ones, but we're just looking kind of a longer term right now. Short to intermediate term trend over here with the 50. Really straightforward, really simple. How are we doing? You can see that all of these lines, folks, they're all going up. And you'll notice too, although the ES, the futures we looked at, it appears to be a little bit higher on the chart over here. In other words, we're probably closer to resting on prior highs if we're looking at the ES, the futures contract. We're a little bit below that. But you can see we're still very close, and did make a new high. And it looks like perhaps we'll get a higher low here. We won't know until we take out these highs right here. Okay. Here is the weekly chart. So we use different moving averages here. We've got a 10 weekly and we've got a 40. You can see that particular crossover showing bullishness happened a long time ago, really. This is all the way back in, first part of 2025 or earlier 2025. But you can see we're still coming up a little bit higher here. There has been a tendency for prices to bounce off this moving average when it hits it. We'll see if that price setup does kind of line up with this longer term moving average and see what we've got. Clearly, in terms of the weekly, a lot of range right here to look at. We're well above this longer term weekly moving average, and these will really tend to find maybe longer term bottoms. You've got one over here where we went down and we touched the green area. We broke back up above it. Really that really long term trend, that weekly 40 period. When did we get back up above it? Well, it was right there. We dipped right there, kind of that V shape, and we got right back in after that bottom had kind of formed right here. Okay, getting above the longer term weekly moving average. All right, so that's what we're kind of looking at right there. Now, when we looked at the S&P 500 and we saw the possibility of a flag pattern, and this is not uncommon because we have seen a multitude of flag patterns all through last year. You can see over through here. There's just a number of them that look very, very similar to where we're at right now, right? I realize this one came down, a little bit of a move before we bounced off that moving average, but we've got a lot of those moving averages. So the question is, what's really kind of leading the S&P 500? In other words, what is positioned into this year, 2026, that might be showing strength in that basket of S&P 500 stocks? What is trending up with the S&P? Because we know within the S&P, some sectors are up and some sectors are down. It's just a great idea to see what we've got in there right now. So let's go ahead and dive into that. In fact, what I want to start off with first is just the sector. Let's go to the market and sector. The sector rotation grid is good. let's do this. I'm going to do sector grid for now, though. This is just the actual stocks excuse me, an image of the actual sectors and the stocks within each one of them. So there's no relative performance on this. I just wanted to examine which of these is actually showing maybe better indications of a bull flag and not maybe a bear flag or a recent weakness. If we take a look over here, I would say energy, folks, very, very clearly flat at this point in time. Now, if we break up higher, we could start to see a change there into the new year. Materials is completely different. Let's go ahead and zoom in on these right now. I'm going to go ahead and share this so you guys have it as well. Let's just share this grid. These are just charts, and so it's not a ThinkScript, but I wanted to let you know that ThinkScripts aren't guaranteed for timeliness or accuracy, but these are simply just charts that you can add in, sector charts. If you're viewing this session on the recording, I will have this down below in the description section for you as well. This is the sectors view, just of the stocks within each one of these themselves. But if I right-click on that, once you get this pulled up, you can take a look at the sector right now. Now, do you see this over here? We're getting some of the same bull flag type action. Ooh, actually a little bit more strength. Possibly a little bit of a rally right here to get us going. We don't know if this will be a bull flag, but a little more confirmation in terms of that bounce as it stands right now. A little bit of staircase action too here. Prior high. What's in that materials group? Could be very, very interesting to kind of take a look at and see what is maybe moving here. I'm going to quickly zoom on over into the scan tab to show you that right now, since we're looking at it. And because I'm looking in the S&P, again, StockHacker S&P in that basket, let's intersect that so we can just isolate everything else that's in the S&P and look specifically at that group, materials right here. And so these are all of the companies in that S&P sector that we're looking at that make up that chart. And this is what you've got right in here. Okay, so some of the companies you've got CF kind of, moving a little bit today. You've got MOS. Let's just look at CF. Dow's in there too, referred to as Dow Chemical is what that is. Here is CF as we take a look at it. And there's the move right there on CF. Kind of a bigger move. You're up about 3 points on CF right now. Okay, it's been down a little bit, but keep in mind the entire sector could help to influence some of the stocks within this group. There's CF, you got Dow over here. There you go. These have been down for a little bit too. But will there be a rotation in there? Well, that's interesting. We'll have to wait and see. But that is how we're starting off first day of 2026. That is how you narrow these down when we look at them. Let's go back to that again, the sector grid. Okay, these are just all sectors within the S&P. All right, another one. Let's look at a couple in here that might be showing some strength, give you guys some ideas and some areas to look at. That is the one that's really kind of flagging right now, moving higher. I would have to say financials too has a very sort of interesting flag type formation. You've got higher highs and higher lows, as well as a pullback. Others, it still seems like it kind of remains to be seen what we're going to be getting. But we'll want to keep an eye on anything in this first or second week that starts to break above maybe a range over here. Communication services, information technology, tech's been the leader, right, for the last 3 years, roughly. I would also say this, industrials, a little bit of a, I'm sorry, I missed that one, but it's very, very close. It's like a little flag pattern here as well. Realize that might be a little tricky to see, but look at this. If I draw a line through there, could that be on the verge? And could these be areas where we're seeing that sector strength as it relates to the market that's been performing so well? In other words, where's that strength going to come in at? Maybe not in these downtrenders as much. Real estate, utilities, a downtrend. The staples looks to be making lower lows and lower highs as well. So I think this can be helpful here. This can, if we go to a rotation grid, which I'll pull up right now, we're looking at relative strength compared to the S&P 500. Now we can really see Let's clear that one off. We can really see what maybe has been moving as of late. A couple of big titles in there. There you go. But what we were just looking at, materials, even stronger than the chart. Look at that trend on materials here. Big moves. So what we're doing here and why it's different from the chart is we're using relative strength. It's just a simple calculation that each one of these has on it. I'll pull this up right now to highlight that for us. If I click over here, I'm going to go down to maximize the cell. Okay, there's materials. And basically what it's doing is we're just using one indicator right there, relative strength. And what does relative strength do? Folks, it simply does this. It just takes the percentage of the performance of the sector relative to the S&P 500. And so on a percentage basis, how well is it performing over time? It just increases that sensitivity, and that's why we call it potential rotation sector. We looked at a lot of this last year. Let's go ahead and make sure we share this with you guys as well, because these are really kind of the two we do use throughout the year. And I'll share this right now. And this is going to be the relative performance, and I'll just say rotation right on that one. There you go. Perfect. Okay, so you guys have access to these, and you can track each of the sectors now for the relative performance in each one of them and see how that's unfolding. Just looking at it too, as we come over here, I can tell you that communication services, along with tech, seems to be, oh, look at tech. Actually, tech, relatively speaking, tech is down quite a bit, but it's led the last 3 years. So watch this one. It'll show up first. It'll oftentimes show up first on that percentage comparison, this basket of charts. It's more sensitive than the others. Look how high materials is. The other one we looked at, financials, was high. Discretionary is down, really, relative to the S&P 500 collectively. But what I'll oftentimes do, I don't know if you guys caught this, but I do like to look at this one on a 1 week basis. And all I've done is just change the time frames and saved it. And it all comes back to what I just mentioned, the sensitivity of what's happening from 1 week to the next. Because to get a whole entire sector to move, think about it. Look how many stocks we had over here just in this sector alone. We had, this is one of the smallest sectors of the S&P 500. There's only 25 stocks in this materials sector. Many of them have, more than that. I mean, over 50 for sure, 75. I think some have 80. So if you can get a whole basket of these to start moving, it can, and oftentimes does, influence the individual stocks in that group. So watching the trend on the sectors, particularly like on a weekly right here, could be quite helpful. I've just narrowed it down a lot. And it goes so fast that I don't even have it's set up the same way if you're familiar with it, but one way just to see what is, if you see one that has been outperforming, the labels will just fall off too quick. And I'm working on a Think script, you guys, right now, that will have the labels on here for us on each one of these. But what it's doing is having a hard time recognizing these symbols. I've already tried it. I'm working on a couple of workarounds, but I want to have this so that it will automatically populate on each one of these so you can see it. But in the meantime, just do this. You're just one click away. So in other words, where has really been the performance been over the last week? Right here's a big one, here and here. But I would say this group, here and here. Let's just try this one. I'll just see what it is. It's really been moving over the last week, and it can be the initial sign of a change in that group. There it is. Industrials. Oh, we were just looking at the Dow Jones Industrials, but look at that. And then you can take a look at what's happening over here in that group. Again, so easily. Just intersect the S&P to find exactly what's in that group. Industries, industrials. By golly, there's a lot in there too. A lot. Just select them all though, and then we can find out, because I've got the sub-industry listed here. A very good column to have. Throw that column in for sure. I'm just right clicking, adding that sub industry in so we can see what industry they're in within that sector, and boom. So 79 in this one. See, it's bigger. Now you can really see, oh gosh, these are moving big today too. What is it? Boeing's a fix? Okay, I'm going to jump back here. And we'll hit it. There we go. Here's fix. Comfort Systems. Oh, there you go. Okay, this has been kind of a longer term trend. Boeing as well. And you can see that right there. Oh, I have some fibs on Boeing. There you go. Just bouncing off. It looks like 23.6 level. Kind of a bigger day for those industrials right now. Will this be a theme? Folks, at least your eyes are on it now. You can kind of track it a little bit. All right, folks, if you guys are getting value out of this presentation, do me a favor, just smash that like button. It does give me a good sense if this is becoming, if it is useful for you. That's our objective here, of course, and then to help you find out, what can be used, markets and sectors specifically, on the Thinkorswim platform. So a lot of great tools in here, but that's kind of a wrap up in that group. Let's go through some of our big picture kind of market and sector review points as we go through this right now as well. Just big picture, you can see over here, advanced decline line on the NYSE, holding up very, very well. We've basically just gone flat as the markets have gone flat. It's going to be fascinating to see what happens as I'm pointing over here into it, 2026. Because again, if this can begin to just trend a little bit higher, we have more advancers than decliners. That NYSE is bigger, about 2,700 plus stocks. And the New York Stock Exchange can give us a sense of market breadth. A lot of times you want to see more companies coming in order for us to get more breadth and to keep a trend in the market. You've got to have broad participation if you want that trend to continue. It can't just be a small basket of stocks. Over here, we did not quite get below our minus 100. We can keep an eye on this. If we did and then move back up above minus 70, it could move. But this could, some will say, and I'm not too far away from this sometimes. I say if I get close to my minus 100 on the McClellan, which is what this McClellan oscillator is known for on the market, it uses the NYSE as well as a gauge, although we're looking at the S&P up top. If you get below the minus 100 and this is a big this is a big one, you got to get back up above the minus 100 and at least clear, I'll put it in parentheses, well, can't go wrong this way, minus 7, you got to get above there. We are above minus 70. In fact, we're above minus 20. Tom McClellan tells us 2 to 3 weeks rally, and that was pretty effective last year in looking at those touch points. Go back and take a look at moves that occurred when you broke up above there, just as an example. But just, history doesn't always mark out perfectly going ahead, but it can give us a general idea. All right. Okay, SPX EW, still holding the equal weight of the S&P. Just put an EW at the end of SPX, and you got it. Again, market breadth important. Think about that, you guys. It is important. If you're going to get the trends to keep going higher, in many, many cases, you need broad participation, and we're holding on prior highs. If we were to break down, not as good. If we're to break up, traders would say we're getting breadth in the S&P as well. Kind of a reflection. We do not have any of our Omen spikes down below, which is very, very good. We don't have a lot of 52-week new lows relative to 52-week new highs. Traders would say, all else equal, that is a positive for the potential for a move up, unlike what we saw on a weekly downtrend. Of course, this is a weekly chart we're looking at here on the S&P. Okay, there you go. NYSE, this is the NYSE going higher. We don't have a lot of new highs yet. We'll see what happens this year. There is a very good look at our 10-year seasonality. And if you look very hard, folks, you're going to have to squint. But there actually is a dot right there. That is the first day of the year. Now, this other light blue line will start to form, and we'll see what happens. But my main point is not so much this little dot. But what we're getting on average, what do we get for the first 1.5 months out of the year on average over the past 10 years? It's very similar to the last 5 years as well. As a matter of fact, if you cut out COVID and tariffs, which really hit us in March, that's when they were announced, and when COVID hit was in March, but tariffs as well, March has historically been one of the strongest months of the year. On average, I got to say it because it's on average here. We've had down years and up years. We'll make this up. But to start off the year, a lot of times you'll get up to about the mid-March level. If you cancel out these two guys, and those are big ones, COVID and tariffs have affected us over this time frame, tariff announcements from last year. But generally, that is what it would look like if you knock those two out. So these were, I would say, both of those were rare events. Bottom line is seasonality, historically bullish. First, at least 1.5 months. You cancel those two out, maybe 2.5 months going forward. Okay. Yeah. Oh, yeah. Just a quick note. I can see right here on the watch list. A quick note on that. Yeah. Let's see. Could be overwhelming. The ones that we share, and I would recommend too. There are a lot of them in there. A quick note on that. If you come over here and just go into the watch list, you're going to have a lot of personal watch lists, but some of them that are really, really helpful over here, for example, like you can go over here to these public watch lists, and you're going to find a lot in here. Markets, sector indices, things like that, that you can see as well. In fact, what I wanted to do was kind of show you this before we're done. I'm going to go full screen. I've got these columns set up here, right? And what you can do is actually tap into one of those watch lists here. Very, very helpful as you watch performance throughout the year. You can go ahead and just go over here, just jump right into sector indices. We can see which ones performed the best on the year over here. So here's the year. We'll organize by year. So what were the best performers? Well, technology, industrials is in there, which is also starting to move, and communication services led the way. So this is only going to change. This is basically 1 year back, including today as well. So there are some changes in here, but that's the performance on the year. Now, what some traders will do, and we're going to talk about this week, into this year, is we're going to look and see what is the best performer when we get to the first month of the year. We're going to look at this column. We're going to see how we could potentially allocate like example trades into each of these sectors, right? Generally speaking, or stocks into these sectors. We're going to watch the 3-month and the 6-month as well, just to see if performance changes on an ongoing basis. And maybe what a lot of traders will do is they will look to put in a portion of their portfolio into a sector that might be outperforming the others. And as long as it stays on the top, let's say 3-month or 6-month, they'll just keep reallocating whatever is the strongest performer over that time frame. Right now, healthcare, communication services, and energy. We're running out of time, so I was going to just kind of plant a seed because we're going to talk about that more next week on how to allocate sort of a paper portfolio that we'll be looking at so that we can kind of position these a little bit more, set them up. Some quick notes too, just before we wrap this up. I'm going to go over here. Warren Buffett, great investor, just turned the reins over. I believe it was just today. It's the new guy in charge. And last name's Abel, I believe. But you can see over here, that is Berkshire Hathaway. It is not responding to maybe that news specifically. We're just moving down below 500. But this is interesting because he's been on for 6 decades plus, over 6 decades as the manager of Berkshire Hathaway. Okay. And others, by the way, let's see. I was going to say, yeah, some of the semiconductors have really been moving quite strongly for the last few years, and that is one area that's really kind of been kind of expanding as of late. Intel is one today that's really been moving. I'm just going to go take a look at today's change and see what we've got. Yeah, look at that. It's at the top of the list, and all I did was include the sectors here, folks, and the indexes or indices here, as you can see. There it is, semiconductor materials and equipment. Intel is one of those performers there. So that's another way to kind of see what is moving out there. And this one may be bouncing off of a bull flag as well. So, all right, everybody. Well, hey, smash that like button if you like today's presentation. I encourage you to follow us on X, Cameron May CS, Mike Fairborn CS, and be sure to subscribe to our channel. Everybody have a fantastic new year. I look forward to much discussion, and it was great to see you all today. Thanks so much, Ken, for your help in the chat as well. You guys take care and have a fantastic weekend.